this video, I'm going to cover the three local bank stocks again after they have released their second quarter 2024 results. Watch until the end of the video because I'm going to cover their dividend analysis and what to expect going forward given the interest rate cuts as well. So with that, let's go. Get started. Do join my free weekly newsletter, okay, where I cover the US market news, the Asia or Singapore market news, stock ideas, analyst reports to come, meme of the week, and more. Alright, you can find the link in the description box down below. Alright, so the three local banks have released their financial results, okay, just recently, and I'm recording this video. I've already read through all the press releases, their presentation slides, and things like that. But I'm not gonna just dive into each of them, right, and highlight each line and what to expect and things like that. What I have done is to compile them into an Excel spreadsheet, okay, on Google Sheets, and I'm gonna walk you through three different categories that we should look out for. Okay, so the first category is the profit growth, as well as interest margin and cost to income. So now let me walk through each bank's performance, okay, for the quarter itself. For DBS is up 4%, okay, for their net profit. UOB is down 1%, okay, and OCBC is up 14%, in impressive 14% when the other two banks are single digit, either drop or increase, okay. So OCBC really stand out here, an impressive double digit of 14% net profit growth on a year-to-year basis. The second line that I want to share is the net interest margin. So we are all worried that given that if US were to cut interest rates, what will happen to the bank's net interest margin? So later on for DBS, there's this interest rate sensitivity analysis. So you can watch until the end of the video and I will showcase that. But for now, I can see that all three of them are roughly the same at around 2 to 2.2%. Okay, so if the economy, I mean the interest rate cuts were to happen, all of them will be impacted. So because they are around the same. Okay, so the impact will be around the same lah. Right, the cost to income. Okay, so we have already exclude the one-offs, and UOB is currently at the highest of at 42%. So if you were to include UOB's one-off integration with the Citigroup ASEAN business, right, that they acquired some time back, it will increase, okay, to above 42%. Whereas OCBC also stand out here at 37.8% cost to income ratio, which is very good, right, as compared to the other two. Now let me share with you the other category, which is the ROE and the valuation and the dividend yield. So for the ROE part, okay, DBS coming in at 18.2%. Fantastic as compared to the other two, around 14%, but it has been down slightly from 19%, if I'm not wrong, last year. All right. That being said, right, probably because of his higher ROE, DBS also trades at a higher price to book ratio. Okay, for banks, we are using the price divided by book value ratio. Okay, so this is very common valuation indicator for the banks itself. For DBS is 1.6 times, the other two banks is 1.1 times. And now, for the dividend yield portion, right, I have actually analyzed their first half, okay, dividends. All right, so now let me go through the three dividend tabs. Right, so for DBS dividends, we have taken the annualized, which is 54 cents for 2024, right, times 4. Okay, so I will expect you to have 0.54, okay, and 4 periods, right, will be a dividends of at least $2.16 for financial year 2024. Okay, so this divided by the share price, and we are getting around 6.4% for DBS. Next up, UOB. Okay, UOB also same thing. I take 88 cents times 2. Okay, so you can see in the past 3 years, they have roughly kept the same. Okay, Like for example, interim they give 60 cents. For the final dividend, they will also give 60 cents or even higher. So for this time round, they're giving 88 cents. So I just times 2, right, to get an annualized figure. And UOB, I'm getting a 5.8% dividend yield. Now, the last one, OCBC. All right, so OCBC also roughly the same. Okay, they tend to keep it at a 50%, payout ratio. So you can see that they have really increased their dividends since FY 2020. Okay, from 31 cents to 82 cents. So that's like more than double, right? 50 cents increase. Wow, but because the financial year 2020 is COVID lah, so they have reduced their dividends back then. Okay, but that being said, all right, I simply just take 44 cents for the first half, the interim, and multiply by 2 to get 88 cents divided by the current share price, and I'm getting around 6.2 to 6.4%. Okay, so again, DBS and OCBC are outperforming, okay, in terms of the forward dividend yield for this year itself as compared to UOB. And if you have enjoyed this video thus far, I will greatly appreciate it if you can help me to smash that like button, subscribe to my channel, and ring the bell so you get notified every time I release another stock analysis video. Now let's move on to the last category, which is the growth prospects and the interest rate sensitivity. All right, so this is the URL. I just put it here for my own reference. Okay, now let's talk about growth prospects. Beforehand, right? So DBS, they are focusing a lot on the fee income. Okay, the fee income is at an all-time high with a double-digit growth in wealth management, cards, loan-related fees, and so on and so forth. Okay, so you can see from here, they are prioritizing to get more AUM and shift and pivot to investments to negate the kind of slow down in terms of loan growth or lower interest rate in going forward, okay, because of the US interest rate cut. For UOB, all right, for the ASEAN, okay, acquisition for Citigroup, they have more or less done other countries. So now left with Vietnam, expected to finish next year 2025, and they are prioritizing more ASEAN card collaborations, which you can see from the Taylor Swift concerts and all the other very popular concerts, whereby UOB is always the one to maybe I think they spend a lot to get the deals, as that's why their cost to income ratio is getting higher, because maybe they are spending more right now to get the to get the first hand deals on people who sign up for UB credit card. They can get first, what you call that, early access to all the concert tickets. That's just my guess lah, okay, that they are spending more money on marketing and things like that. But I do see that if the ASEAN region, okay, starts to become better, okay, starts to develop more, economic growth will shift from China to ASEAN, right? Because of maybe the upcoming trade war worsening and things like that. So all in all, I do feel that this is a right move for UOB. You spend on marketing first, then you get back the rewards later on. And next for OCBC, all right. OCBC also in the news, all right, because of their recent Great Eastern acquisition. I'm not going to dive a lot into that, but if you read from the news itself, they have paid a premium, okay, for the share price. And but if you go in further into the details, right, a lot of people are complaining that the Great Eastern NAV is at a is worth much more lah, okay, and they are sort of getting a low ball offer from OCBC because of the bad temporary bad news that make Great Eastern not doing so well just recently. Okay, and hence if you privatize now, you can enjoy the upside going forward for OCBC. All right, so that's just one story. The other story is that OCBC is supporting a lot of ASEAN and Greater China trade and investment flows. Okay, so given that OCBC has this very strong base in ASEAN as well, they are facilitating all this maybe the shift in the business from China to ASEAN and things like that, right? So with that comes more wealth management, AUM and things like that as well. So you can see how they have actually double digit net profit growth from there. All right, so that is the growth prospects. For the IR sensitivity, okay, the other two banks didn't come up with any in their presentation slides, or if anyone can find them, please leave a comment down below so that we can all get to know as well. Okay, but for DBS, they have came up with this, right? If net interest income, okay, if the US Fed funds rate were to be cut for every basis point, which is like 0.01%, right? One basis point, the bank will suffer a 4 million net income drop. Okay, so if you think about it, if the US reduce interest rate by 1%, which is 100 basis point, you take this 100 times 4 million, that means DBS will stand to lose 400 million to the bottom line simply because of 1% interest rate cut. So that is how, just a small percentage can mean a very, very big deal for the banks because of their huge asset base. All right, so this is all for the second quarter 2024 results for the three local banks. So all in all, I do see that the three different banks are all quite cautiously optimistic about their near-term prospects, right? So although all of us already know that interest rate cuts are coming, I do have a sensing that the three banks are actively trying to mitigate this drop in bottom line in future by increasing all the different fee income, right, through either credit cards or higher AUM or things like that. All right. So in general sense, I don't see that the banks will perform very poorly, especially when they are all very sufficiently capitalized. They have strong balance sheets and all that, and they are trading at above 5% dividend yield. I think that is hard to come by, especially when you already know that the bank is kind of a stable stock and they still give you a 5% dividend yield. So why would you still go for fixed deposits or T-bills at a 3% yield, and especially when that is coming down at the same time as well. So, but that being said, right, it's not about me, it's about you. So, what about you? What bank stock is your preferred one? Do let me know in the comments down below. With that, if you find this video helpful for you, you will also like my newsletter even more. Alright, so do remember to join our 9K plus members and stay updated by subscribing to my YouTube channel as well for more of such videos. And I will see you next time. Thanks for watching and ciao. Bye bye.